Hello. Hello, everyone. Please, can everyone hear me? Good evening, everyone. All right, so we're just waiting for about 3 minutes for others to join, and then we commence the webinar proper. Welcome, everyone. Bisola, I can see you. Welcome. Olanyinka, I can see you. Kofu, I can see you. Please confirm yes if you can hear me, please. All right, so we'll be starting in 3 minutes, everyone. Sorry for the delay, so others can join. Please, those on the group, kindly help us to tell them that the webinar has commenced so they can join us here. Thank you. Please confirm yes if you can see my screen. Okay, hello, good evening, everyone. So we'll be starting. Others will be joining us shortly. Welcome to this webinar. And this webinar basically is for the May 2025 Ican exam diet. And then we're focusing mainly on just two papers. And the first paper is the strategic financial management. And then the second one is the performance management. So today's webinar will be focused on talking about how these two papers actually relate in a way. And then we'll look at a topic that actually relates the two levels together. And then the webinar from tomorrow, we are going to be splitting. So we're going to be having core SFM papers or core performance management papers. And we're going to be looking at focus areas, at least for this May 2025 exams, right? So, and that's what we are going to be dealing with, all right? So I need everyone to pay attention. The approach that's going to be given to you here will be a no-thinking approach that you get into the exam hall and you get a minimum of 50 and then you come out with a flying color. And that's the approach we're going to be giving. I understand very well that performance management and strategic financial management actually, they have different tricks, different computations, different styles and methods, right? So, but what you should know as a student actually is to stick to one that actually works for you, not jumping from book to book and all of that. So basically, before we go into the papers proper, we're going to be looking at how to actually pass your exams, at one sitting, right? So regardless of whether you have written this paper before, performance management, because there's a general belief that performance management actually is the most difficult paper to write at the skills level for Ican. And if you get to the professional level also, which I don't even know why people think that strategic financial management also is as difficult as anything, right? These two papers are actually easy to pass and again, very easy to fail, all right? And so tonight I'm going to be telling you what you need actually to pass the coming exam, right? You don't have to write it again. As you're going into the exam hall, you are going with the mindset that, look, this is the last time I would ever have to write this paper. And that's why we have this webinar. So this webinar will be for as long as maybe 6 days, and we're going to be covering everything that you need to know before you go into your exam hall. All right. So I will need you to bring your questions, and I'll also be giving you assignments on this channel for you to practice. And also, some of you already have a group. You can bring in your questions that has to do with strategic financial management or the performance management, and then we'll attend to that. So we're going to be doing a lot of practices together, and then also let's see how far we can go with this webinar. This is the first of its kind, and ACC has actually been doing it in the past, and it has worked for them. So we thought that, oh, it would be nice if we can actually start Ican webinar. For every diet that we have, we're going to be looking at webinars that has to do with exams. So part of what we're going to be doing actually is looking at past questions, looking at trends, right? What they've tested over time, areas where your examiners actually, are likely to bring questions from where they think students don't actually know. And the funny thing is that those areas that your examiners think that are very, very difficult, those are the areas they keep bringing out. And students are still not aware that, look, for you to sit for SFM or a performance management paper, you need to actually practice and actually understand these areas of your syllabus. And that becomes very, very important and key for you to, achieve success in this exam, right? So now I have some few points that we're going to be looking at. I want to believe you can see my screen. Please, can you still see my screen? Comment yes if you can see my screen. Everyone, please comment yes if you can see my screen. All right. Fantastic. Thank you. Thank you. All right. So the first thing we are looking at here, look at here. The first one is to understand the structure of your exam. This is very, very key. You can't say that you want to go in for an examination, right? Such as the SFM exam and or the performance management exam, and you don't understand how the exam is structured. What are the areas? What are the ones that actually carry a lot of marks, right? So you need to familiarize with yourself with the syllabus of the exam, the format of the paper, and also to know how you can actually focus on your preparation. And that's the first point here. You need to understand the examination structure, right? The way PM is structured is different from the way strategic management exam is structured. The way you attack your case study is not the same way you attack your strategic financial management. The way you read your audit and assurance papers or advanced audit or advanced tax is not the same way you read SFM or performance management. These two papers require you to actually put your hands on practicing, right? So you need to understand the structure of the exam, right? And if you look at the second point here, you need to create a study plan. A study plan. You can't just wake up and say, oh, today, as the case may be, you want to read SFM. Tomorrow you want to read case study. You don't have a study plan. If you have a timetable, what are the topics? When you give yourself these achievable goals, you'll be able to know, oh, today I want to cover Forex. Tomorrow I want to cover merger and acquisition in SFM. Next tomorrow, okay, I want to do case study now. Which topic? Now break all this, your strategies and your plans into the smallest unit. And every day, you must ensure that you are actually tracking your progress as you're studying. You may be reading and it's doing you like, oh, it looks like nothing is entering, right? It's possible that you're reading and it's doing you like you're not reading. Yes, it's actually very, very possible. But the truth of the matter is every time you read, there's always what you call a residual knowledge. What do I mean? A residual knowledge is something you have read and then something like a residue just dropped at the back of your mind. So those things may just be what will help you tomorrow while you are in the exam hall. So just continue to practice, continue to actually study, and you'll be fine. Please, if you can still hear me and you can see the screen, please comment yes on the group, on the live chat, please. So I'm sure I'm not talking to myself. Please just comment yes. Thank you, Mr. Joshua. Thank you. Yes, Ada, thank you. All right. So let's proceed. That's the second one. You must try as much as possible to create a study plan. Create a study plan. Now, if you look at the third one, this you cannot even overemphasize this guy here. Practice past questions. Practice past questions, right? So we have seen instances where questions are repeated. Imagine that you practice a question 1 in a particular diet, and lo and behold, you get into this May diet 2025 exam, and then the same question is staring at you in the examination hall. So what would you do? So there's always a learning curve. If you have practiced a question over and over, or you practice a particular question, if you see that same question, the average time you're going to be spending to actually solve that question in the exam hall will definitely reduce. And so this becomes very, very, very important for you to practice your past papers. And again, I need to emphasize that when you're practicing PM and SFM, and this is the problem here, what students do is they bring in two documents. One has a question and the other one has the answer. All they are doing is just trying to audit the answer. This is not the right or effective way to practice SFM or performance management. The effective way to practice is closing the solution page and then put your pen to paper and then try to solve using the concepts of that exam that you know already, or that topic that you already know. And that's how you know whether you're making progress. You don't audit answers. And that's what a lot of people do. Oh, they added 1 to 2, or they added 3 to 4. That's why they got 5 or got 7 and all of that. This is not how to practice. Practicing performance management, practicing strategic financial management entails you to actually put your pen to paper and close the solution and then try to solve it using the technique or using whatever thing that you have actually learned about that topic, applying those those concepts and then trying to solve. And that's how you actually do an effective practicing. That's number 3. Now going to number 4, examination strategy. Examination strategy. Now, the problem again is that it's possible that you know this course back to front, but you may get to the exam hall and still you don't know what happened and the person is failing. You've had instances that people will say, oh, I even taught this person in the exam hall, in the class before the exam, and the person passed, and I taught the person, I failed. So what actually makes a difference within that 3 1/4 hours that is given to you is actually you being able to understand the examination strategy, and then you also able to focus on what you want to achieve within that 3 hours without interrupting what you're thinking. So during the exam, what you need to do first is to read the questions carefully, right? And again, after reading the question, one other thing you must understand is actually how to manage your time effectively. Time management is very, very key. The truth of the matter is, I've never seen anybody that is saying, no, I'm writing PM, or I wrote PM or SFM exam, and then I have enough time to finish. I've never seen. You always see 1 or 2 things to write. And the reason is because the examination is not only testing your ability to actually understand all the questions they're asking you. Part of what they are testing is actually your ability to be able to work under pressure. So when they put you under exam condition, how fast will you be able to achieve this, set goals and objectives within this time limit of these 3 hours? And that's part of what your exam is actually, testing. And then every exam, there are actually opportunities, or there are, how do I put it now? There are actually everything that will just tempt you in the exam hall, such as a question that you know so well coming out. Now, when you see a question that you know so well, and they say this question is for 5 minutes, and then you see, it's for 5 marks. You see somebody trying to spend 1 hour on such question, or even 30 minutes of such question. That is actually a very wrong thing to do in the exam, because every exam you definitely see a question that you love so much, and then by the time you start attacking these questions using your emotion, it becomes very, very difficult for you to achieve other targets or other goals, and so for you to be able to move into the next question, right? And then again, one other thing that you need to remember is actually allowing yourself to be timed out by the examiner. Timing out means that you're solving a question. You have other cheap questions at the back of your, at the back of the question paper. You will see question 7, question 6. Those questions are actually 15 marks, and they are designed to actually be very, very cheap. They are easy marks that you can pick there. 6A, 7B, here and there. You can see 3 marks, 2 marks here and there. The moment the examiner tells you 30 minutes more to go, the next thing you need to do is to leave whatever question you're solving that's giving you a headache to go and start hunting for marks. And now, every time you're in the exam hall, what you're doing in the exam is like you're just trying to hunt for marks. You're hunting for marks. All right. And that's one of the things you must actually know also as part of the exam strategy. Now, let's go to the 5th one. The 5th one is managing your stress. right? Managing your stress, right? You can't continue to read and read and read overnight. You're not sleeping, you're not resting. The truth of the matter is, if you don't give yourself a break, if you don't rest a bit, your assimilation rate will definitely reduce. As you prepare for exam now, right? I think you just have basically 1 month to your exam, or 1.5 months to the exam. There are temptations here and there, right? Take this textbook, take this one, come, let's sleep in class and all that. You're not eating well, you're not taking a break, you're not sleeping well. By the time you're trying to read, it's possible that this would actually impair how much you can actually take, how much you can actually read. And this becomes also a problem for you in the exam, right? Not being able to assimilate so well. And again, one thing people do is that they write too many papers. You know yourself very well. You know what works for you. Look at the structure of all the papers you want to write, right? 5, 6 papers. I'm not saying that writing 5 or 6 is not doable. It's very, very doable. As a matter of fact, when I was writing my own for Ican, I did 5 all through, right? When I was writing ACC, I took 2, right? And then I was done, right? So what I'm saying is, if you don't have the time, you can't stretch yourself beyond that limit. There may not be a need for you to pack as many papers as possible. You remember that your SFM and performance management in some universities, there are 4 years course, and then you are expected to do this within 3 or 4 months in Ican, and then to pass and pass well. So that means the syllabus is so robust enough, to take your time. So if you're not sure of all the time in the world that you have, it means that you need to actually, try to strategize and know how many papers your capability or you're capable of actually doing, before you just carry 5 and then you're not resting, and then instead of passing 1, 2, you fail all of them, which I don't believe that will happen to anybody here. As long as you're on this webinar, whatever thing we're going to be doing will be just good enough for you to go and pass at least, or to get at least 50 marks, to just pass this paper once and for all. All right. And so the last one we'll be looking at is your focus area, right? Focus areas. Now, there are some areas where students don't like at all. Students don't like them. For instance, if I talk about risk management in strategic financial management, right? Where you talk about currency risk, interest rate risk, or even talking about international investment appraisal, there are students that don't like anything that has to do with exchange rate because they feel it stresses them, right? If you come to performance management also, there are some students that don't like a particular course, maybe your risk and uncertainty. In fact, some persons don't like variance analysis. Just imagine that in PM, you said you're not going to be doing anything that has to do with variance analysis. And lo and behold, like it happened to them last night, you got to the exam hall and your question 1 is variance. If you say you are not doing investment appraisal, you go to the exam hall and your question 1 is investment appraisal. The moment you cite that question, already you are demoralized. Even if you know what to write, the fact that a question that you never thought it would come out is coming out for 30 marks is enough to just throw you off balance. And this is the problem here. All right. So my advice will always be that you do not cherry pick what you're reading, right? Gone are those days that it was very easy to predict what Ican would set, right? If you go back to 2017, 2018, you could just look at the trend analysis. Oh, variance was tested this diet. No, next diet it will not be tested. 2019 also, something like that. But recently, it becomes very difficult. What it means is that they can bring in portfolio today, and then next diet, if they feel that a lot of students still don't understand the concept of portfolio, or they see that the attempt rate is actually low, they can decide to bring it in again and bring it in again until they feel very comfortable. At PM level, skills level, there was this diet for good 2 years. They continue to test economic value added. And every time they bring it out, they will say, students are yet to understand the concept of economic value added. They will bring it again in another diet. They continue to do that until recently they stopped. They did that also for activity-based costing. So what I'm saying here is you cannot cherry pick what you're reading. You cannot cherry pick what you're going to be studying, as long as your target is to get 50 marks. What I will advise you to do is to stretch yourself within this 1 month that is left for the exam, right? Stretch yourself, practice, and also look at everything in the syllabus, everything. Don't cherry pick, all right? And that's just the little, advice that I have for you as long as this coming exam is concerned. For those of you that already have my handle, you can always reach out for me if you have any issue in any of this paper. All right, so we are going to be doing something very, very shortly before we start fully. I need those of you live now to comment whether it's PM you're doing or SFM that you're doing. All right, if you're PM, just write PM. If you're SFM, just write SFM, and that will guide us on how to diversify going forward. All right, so I'll wait for you for 2 minutes. I need you to just do that now. PM, SFM. If it's PM you're doing, write PM. If you're doing SFM, write SFM. And then that will guide us on what you are doing now. Thank you. Okay, SFM. All right, others, please, I'm waiting for you. I have PM 1, 2, 3 PM, and then I have SFM. Please just write now so I can know what we are going into. Okay, PM. Okay, SFM. Okay. All right. Okay. Ayomide SFM. Intinam SFM. Kelvin SFM. Mata is PM. Sunday is PM. Bamidele PM. Oh, sorry, Bamidele is SFM. Amodu is PM. Okay. Daniel is PM. Anyatobo Bisola is SFM. SFM. Okay, so about the same number. About the same number. PM also. Abigail is doing PM. Jennifer, SFM. Okay. Amodu, PM. Okay. All right. Please, can you all see the whiteboard? Please confirm if you can see the whiteboard. Just type yes, please. If you can see the whiteboard, just type yes. Okay. Fantastic. All right. All right, so today we'll be looking at economic value added. Economic value added. All right, this is an area of the syllabus that actually intersect between PM and the strategic financial management. And we are doing this today because we have everyone joined together. And from tomorrow, depending on what the vote is saying, we'll know which paper we are going to be taking tomorrow. But for today, we have economic value added. Now, this area of syllabus is in divisionalized performance. For those writing PM, all right, under your divisionalized performance, you would see something, the likes of ROCE, the likes of residual income, and then you have the economic value added. And then when you get to the advanced level, in your business valuation, right, market value added is actually a method also of determining the value of a business. And now, trying to determine the value of a business, you need to first understand the concept of EVA, economic value added, EVA. EVA. All right. So this EVA is now discounted, all right, to give us what you call the market value added. Market value added. And that's what we're going to be looking at today. First, what is this economic value added? What is EVA? What is EVA? EVA, like I said, is economic value added. All right. So this is a method of determining a realistic value of any business. Realistic value of any business. Realistic value of any business, right? So now, the reason why this EVA is actually coming is because EVA actually is, what's it called? It's actually an advancement on what you call the residual income. Residual income is the income that is left after deducting imputed cost. Now, look at residual income. Residual income equals to profit before interest and tax minus capital employed multiplied by the weighted average cost of capital. This is how you calculate your residual income. Now, if you come to EVA, EVA is simply net operating profit after tax minus economic capital employed multiplied by the weighted average cost of capital. Now, if you look at these two formulas, they are actually same, so to speak. They look alike, right? Now, if you look at this, instead of under residual, you have profit before interest and tax. But under EVA, instead, you have what? Net operating profit after tax. Please, if you have any question, you can just put it on the comment section. I will try to attend to that at the end of this webinar, all right? Now, profit before interest and tax, you all understand that this is basically just your normal accounting profit. Accounting profit. And if you hear the word accounting profit, you know a lot of things will have gone in. Your non-cash expenses, depreciation, your subjectivity will come in, and a lot of other things. But we said that under EVA, EVA actually measures a realistic value of business. That is what actually is your value right now, right? Based on what is happening in the economy, based on the circumstance around our business and what is our value. So it means that using residual income may actually be misleading because of the subjectivity. And then instead of using the profit before interest and tax, EVA will say, no, we are not using profit before interest and tax. Instead, we are using the net operating profit after tax, which means that, let me just define these terms, no part. This is net operating profit after tax. In some textbook, they will call this guy adjusted profit. Now, what they are saying really is that we are not using the accounting profit because it's subjective. Instead, we are using the adjusted profit, meaning that whatever thing that is subjective, whatever thing that is non-cash in this profit, right, accounting profit, we need to adjust it before we use it for EVA, economic value added. And that's what this EVA is actually preaching. If you go to the second part, the capital employed here. Now, in your normal accounting, to get your capital employed capital employed is simply your total asset minus your current liability. Total asset, of course, is your non-current asset plus all your current assets added together. That's what gives you the total asset. If you come to liability, current liability are those liabilities that fall due within one accounting period. And so if I take this off the total asset, what it means is that I'm going to be getting my capital employed. And again, if you come to this capital employed, there are a lot of issues around capital employed, from how you treat your asset, from the classification and all of that. And so under EVA will say, look, there's a need for us to adjust this capital employed again. And then this adjusted capital employed is what you call the economic capital employed. Economic capital employed. That is capital employed that reflect the actual reality, what is happening now, right? And then, of course, your work. So this is capital employed. I already said that. Capital employed. Capital employed, which is my CE. Please, if you can still see what I'm saying, please comment yes. So I'm sure I'm not talking to myself. Please quickly just comment yes. Okay. All right. So capital employed. So the next is our WACC, weighted average cost of capital. Weighted average cost of capital. All right. And this guy, formula you are familiar with, cost of equity multiplied by the value of equity over VO plus the cost of debt multiplied by the value of debt over VO into 1 minus the tax rate, where KE, like you know, is the cost of equity. VE equals to value of equity. KD is cost of debt. VD is value of debt. And then, of course, our VO is value of organization, which is like our total. All right. And this comprises of value of equity plus value of debt. And then you have, of course, our tax rate. Tax rate. All right. So the problem with EVA actually is how to adjust for these items. How do you adjust for these items? All right. So NOPAT, how do you adjust for it? Economic capital employed, how do you adjust for it? Capital, weighted average cost of capital is not a problem. All right. So what I will do now, I will just give us a format, right? We said EVA is NOPAT minus economic capital employed multiplied by weighted average cost of capital. So how do we adjust for NOPAT? Adjustment for NOPAT. Adjustment for NOPAT. All right. So first, we have our profit after tax. Now, what they will do is usually they will give you the statement of profit and loss of that company, and so you're meant to actually adjust it to get the net operating profit after tax, right? Now, I have this guy here. The next is add back. First thing is non-cash item, or if you like, expense. Now, you are only adding back if this non-cash expense have actually been expensed before arriving at profit after tax. And so adding this back means that I'm bringing the value here, right? Then I have interest. Interest net of tax. Interest net of tax. How do I get interest net of tax? Let's assume that interest for the year, let's say, is 9,000. And then the tax rate is 30% tax rate. Now, interest net of tax is simply 9,000 multiplied by 1 minus 0.3. And whatever thing I get here is what is giving me interest net of tax. The next is to add back accounting depreciation. The reason is because remember when I was explaining this profit, accounting profit, I was telling us that accounting profit actually has a lot of subjectivity. And if you look at this depreciation, actually, accounting depreciation, right, depends on policy. It just is policy of, spreading the cost of an asset over its useful life, right? It doesn't actually reflect any economic benefit or actual decline in the value of that asset. Rather, it's just to comply with the matching concept, because revenue and cost must match in the period that they relate. So if I buy an asset for 20,000 naira, it means that since I'm going to be using that asset to generate revenue, I should get a cost that relates to that asset that I must charge to each of the year for the remaining years of that asset. And that's the essence of accounting depreciation. But if you look at it, critically, it doesn't actually reflect actual wear and tear of an asset. And so when you have accounting depreciation that has been charged already before arriving at profit after tax, you add it back. Add back accounting depreciation, right? The next you should add back is expense long-term expenses, right? Such as R&D, marketing, all right? These are expenses that actually relate to maybe research and development, and they're supposed to be beneficial to the organization for a long period of time. What you should do is, if they have expensed this guy, what you should do is to add it back. Add back. Now, the treatment of this R&D in EVA, please, are you still with me, everyone? Are we still here? All right. So the treatment of this R&D simply is that this R&D must be capitalized. All right. So if it must be capitalized, what it simply means is that anytime they have expensed this R&D, what I should do is actually to add back this R&D. Now, adding it back simply means that I'm actually trying to correct the error that they have made in this profit after tax. I'm trying to add it back so I can restate this value. So when I restate this value, I'm supposed to amortize this value over the useful life, and then charge the amortized value to the profit and loss for that period. And then whatever balance that is left, which is the net balance, will now go to capital employed, which we'll go into very, very briefly. All right. So the next is increase in provision. Increase in provision. Anytime there's an increase in provision, what it means is that your profit would have been understated, because provision actually reduces your profit, right? When you make a provision, right, they charge you to profit and loss, so it reduces the profit, right? So when you have increase in provision, because provision actually does not really involve movement of cash here, it's just like you're providing for something. So when there's an increase in provision, you add it back, because the profit has already been understated. So I need to add back that value, right? So the next I should do here is to deduct. Deduct first is economic depreciation. Economic depreciation. Economic depreciation is that depreciation that reflects the actual wear and tear of an asset. If, for instance, I have two cars, right? Two cars, car A and car B. If in a particular year, I use these two cars, they are in the same asset class, the same class, right? Like we used to have them in our balance sheet. Now, if in a particular year, I've used this asset like 50 times, and I've used this one for only 20 times, maybe there's no so much demand, and so I only need to just use asset A more. So there's no need for asset B, and then left it. Now, your accounting depreciation policy is that all assets in the same class must be added together and then depreciated using the same rate. But in real sense, in economic reality, only asset A has actually been used more, 50 times. So what economic depreciation is saying is that if I use asset A 50 times more than asset B or 30 times more than asset B, it means that this asset A that I've actually used more should be depreciated faster than B. And so the economic depreciation is actually reflecting the actual wear and tear of that asset based on their usage, based on how much economic benefit I've derived from them. All right. And that's what economic depreciation is saying. The next is decrease in provision. Decrease in provision. Decrease in provision, simply what this does is when there's a decrease in provision, your profit is overstated. Because when there's a decrease in provision, you have what you call a write back. A write back means that you are adding back this provision that you have made, provision that you don't need again, you're adding it back to your profit. So if you're adding it to profit, because you are saying provision, right, in itself does not involve movement of cash, right? You're just providing for an item. And so where it has been charged or deducted from profit, what I should do is to restate it. So if it's an increase, it means they've deducted it from profits and understated the profit. What I should do is to add it back. Where there's a decrease in provision, meaning that they have actually written back this amount. So what I should do is to deduct it from that profit to restate the value. All right. And the last one here is the amortized value. Amortized value of R&D. This R&D here, you know, we said that we are adding back this total amount that has been expensed. When you add it back, you're actually expected to amortize this R&D over the useful life and then charge a portion that relates to that year to your profit and loss. So if it has not been treated, what you should do is to deduct this amortized value. And then if I add all this together and then bring it under this profit, this should give me my NOPAT. This is my net operating profit after tax. All right. So by the time we start solving questions, you get to see more adjustment, but just to give you a simple format. And if you need a document relating to this economic, what's it called, economic value added, please, you can just chat me up or just request for it on the group or on the comment section, and then I will try to send it to you, both for PM and for the strategic financial management, paper. All right. So the next one we need to look at is the economic capital employed. Capital employed. This actually, the adjustment is very, very simple. All right. So what I'm doing here first is I have my capital employed at the beginning. Capital employed at beginning. This is what you're using at the beginning. I have a figure here. Right. Next, you have non-capitalized lease. Non-capitalized lease. Now, all kinds of lease must be capitalized. If any lease, let's say operating lease, for instance, has been expensed, remember, like I said, there are more adjustments that will come in here. If you have operating lease that has been expensed into your profit and loss, it means for me, what I should do first is actually to disallow that expense by adding it back to the profit if it has been expensed, right? So all kinds of lease must be capitalized. And then I bring this figure here. The next is the cumulative value of non-cash expenses. All right, that's accumulated over the years. If you have the cumulative value, also you capitalize it, and then you now have the net balance of R&D. This R&D, let's say the R&D total is 100 million, and for the year I've charged 50, let's say 5 million. Or let's say 10 million, 10 years, 10 million. This 10 million will have been charged to my profit and loss, or profit or loss, it means what I'm capitalizing is the net balance, meaning that I'll be having 100 million minus 10 million. And so here I should be having something like 90 million. All right. So this is the net balance. And then I bring this value here. And then add all this together and bring it down will give me the economic capital employed. Economic capital employed. And then work is not a problem. Now, for those in performance management class, right, this is where your own work will stop on this adjustment. When you're done, all you need to do, of course, you'll have calculated your work, right, which I already explained, right? In question, you see how this is done, just in case you're seeing this for the first time, right? And then I get my EVA equals to no part, which is what I've adjusted here, bring this value into the formula here, no part, minus economic capital employed, bring this value also here, economic capital employed, and then multiply by work that I've calculated, work. And then if ever is positive meaning that it's greater than 0, it means that the company has created value, or the business has created value. If my ever is negative, meaning that it is less than 0, it means that value has been destroyed. All right? And this is how to interpret. Now, at the strategic financial level, after getting this ever, now let's say that your ever is 900 million. In the exam, they will have told you that this ever is expected to grow, blah, 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 with whatever. So this ever discounted to infinity, right, equals to the market value added. All right. And I was telling some students recently that this ever somehow in the SFM paper, somehow for a long time, the last time they tested was in Jack, I think 2017, Jack Limited. That was the last time I think they tested, 2017 or 2018. I can't remember exactly, right? That was the last time they tested this. And I don't know why recently I've not been seeing ever in research papers. But again, we don't know how they will come this diet. And so you need to prepare against anything that is coming forth in May 2025. All right. So now let's say that our growth rate for 4 years, or let's say growth rate to infinity, so I don't complicate, growth rate equals to 2%. Equals to 2%. 2%. And then our work is, let's say, 10%. All right. So now my market value added will simply be 900 million into 1 plus 2 divided by 10% minus 2%. Whatever value that I have here is what I call my market value added. And that becomes the valuation of this business based on market value addition. All right. All right. Do we have any question? Do we have any question? Question? Okay, so somebody is asking, when is SFM going to commence? I will communicate that on the group tonight. When SFM is commencing, for today, like I said, everybody is joining because of the exam advice that I gave. All right. Please, I will communicate, like I said, I will communicate when SFM will actually commence by tomorrow. And then I'll also tell you what topic we are looking at tomorrow. All right. So if it's PM you are going to be doing also, I will communicate that to you tonight on the group. All right. So any question, please ask your question now. Ask your question before we proceed. Anybody having any question so far? Are we still here? Hello. Any questions so far? Please comment. Okay, so Kevin is asking, what is the formula for market value added? That's what I'm saying. Market value added is simply just discount your ever to infinity. That's your market value added, right? Okay, market value added. You know how to get your AVA. Get economic value added. The question, I'll bring that Jackie question. So we'll probably just solve it. I'll bring that Jackie question if possible so we can solve it together. Right? When you get your market value, your economic value added, right? Simply discount that economic value added to infinity. And then you get your market value added. All right. So Gift is asking, I want to understand more of R&D. All right. So first and foremost, your adjustment, you must first understand what has actually been posted into the profit and loss. What am I saying? So for instance, let's say that the research and development for that period is, let's say, 19 million. And then that 19 million has been expensed in your profit and loss. The first thing is, under economic value added, I know that R&D should not be expensed if it's beneficial to the organization. And what I should do here is to capitalize it. So before I can capitalize, I need to first correct the error that has been made. And that error means that I need to add it back to the profit first because you already expensed it. Adding it back to the profit is to correct that error. The next thing I need to do is actually to amortize that R&D. Amortizing it means that simply the total R&D divided by the useful life. The examiner will have provided that the R&D will be beneficial for 5 years, for 3 years. So if it's 5 years, for instance, 90 divided by 5 or 100 divided by 5, that will give me the amortized value of that R&D. And that amortized value must be charged to profit and loss for that period. So what I'm doing, if it has been expensed, add back the total amount that has been expensed, deduct the one that has been expensed for that period, that should be expensed for that period. And then whatever net balance that you have should now be capitalized, which you are taking into your economic capital employed. Does that make sense to you? Gift, are you clear now? Gift, are you clear now? Okay. Is Gift still here? All right. Please, everyone, before we end up, please try and give this live stream a thumb up. Please just help us, just like before we proceed. Please just help us to like this. We have 10 likes now. Please just help us boost these likes. Thank you. Please just give us a thumbs up before we comment. We continue. All right. For those that are left, please let us know. How many PM do we have? How many SFM do we have? Again, just let us do that, and that would help us to chart our way forward. All right. How many SFM do we have now? How many PM do we have now? For those that are left. Okay, we have PM. 1 PM. Okay. Take note of that. Okay, Gift PM. Okay, we have 3 PM. SFM 1, 2, yes. SFM 1, 2, 3, KPM. Okay. Inca, okay, thank you. SFM. We have how many SFM now? This is going to be objective. How many SFM do we have here? PM 1, 2, 3, 4, 5. SFM 1, 2, 3, 4. Okay. Okay, SFM. Olanyinka SFM 1, 2, 3, 4. Okay. PM. All right, please give us a like. Give us a like. If you have not done that yet, please give us a like. Okay. So please, are we all clear with economic value added? Any question from this area again? Anybody? Any question? Economic value added. Are we all clear on this? Okay. So those that okay. Okay, Kelvin. Okay, nice one. Well cleared. Okay, thank you. All right. So what do we have? SFM, we have 1, 2, 3, 4. SFM is 4. PM is 1, 2, 3, 4, 5, 6. All right. I think we still have some people that have not voted. Please, if you have not voted, I think we have people that are just connected and they are not here. Maybe I need to know which paper to take first. That's what I'm asking. Okay. All right. Okay, SFM. 1, 2, 3, 4. So please, is tomorrow fine for us to do maybe 4 to 6 SFM first and then 6 to 8? Okay, so from the initial vote. Okay, Kevin, thank you for that. So let's look at the timing. Can we do SFM first tomorrow from 4 p.m.? I think tomorrow is still a public holiday. From 4 p.m. to 6, and then p.m. from 6 to 8. Is that okay by us? Please let me know if it's okay by you. Okay. All right. So since today is the first day of the webinar, I wouldn't want to take your time so long. So we'll be ending the webinar here. Please, if you have not given us a thumbs up, please just help us. So tomorrow we'll be doing PM 6 to 8 and then SFM from 4 p.m. to 6 p.m. And we'll be covering areas of question 1 from tomorrow, 4 p.m. All right, the likes of your merger and acquisition, international investment appraisal, adjusted present value. So we'll take one of them from 4 to 6 SFM tomorrow, 4 to 6. And then from 6 to 8, we'll be dealing with PM, and also we'll be looking at areas that would come out as number 1. All right. So investment decision and pricing decision and the rest of them, decision making generally. So we'll be looking at them tomorrow. So like I said, PM is going to be 6 to 8. SFM is going to be 4 to 6 tomorrow. And we're going to be looking at either APV or international investment appraisal, or we'll be looking at merger and acquisition, areas where we think may just likely come out as question 1 for this diet. All right. So thank you everyone for joining this session. And then I will see you again. If you have any question on what you have done, or you need any of the document I spoke about, please just chat me up, and then I'll be able to send it across to you. Thank you for joining, and see you again in the next webinar. Enjoy the rest of your evening. Bye-bye.